AMC is having a bit of a run. So it started Friday during the after hours when they went from $4.39 a share up to nearly $8 a share at different points in the after hours. Now, as of today's trading, they are still up over 30% from where they were on Friday. And there's a few different things in play here. First, which I'll get out of the way right now, is they had a really, really great weekend. Now, that wouldn't have been factored into the after-hours stuff on Friday, but I do think that that's one of the big reasons why they didn't fully drop back down to a normal level and why they are still up over 30%. Now, looking at their financials, a good weekend's one thing, but they have a pretty large hole to dig out of, and it's going to take more than one good weekend. So that's one component. The other, and this is the reason for the after-hours run-up, is this judge decided in court to basically halt the conversion of the AMC preferred equity shares into regular AMC shares. Now, that particular thing was actually approved by shareholders, but the judge blocked it partly because they got 3,000 letters sent to them basically from shareholders that were concerned about further stock dilution. Now, that's going to be important in a second here. The CEO, Adam Aron, spoke out, okay? He said they need the ruling reversed because raising fresh equity is critical to their company. AMC must be in a position to raise equity capital to protect shareholder value in the long run. Now, that's debatable if it's actually protecting shareholder value, but I digress. We must be able to raise equity capital. And this is partly because of uncertainty with the strikes and stuff, so he says. And here is actually the concern. If we are unable to raise equity capital, the risk increases of AMC running out of cash in 2024 or 2025. And being unable to refinance and stretch the maturity of the debt, which begins in 2024. So that's a big yikes, okay, guys? Because AMC, when you talk about raising equity capital, okay, what they're talking about is issuing shares to finance their operation, okay? You can see that during the pandemic, that's how they floated the boat. In fact, today, there's more than 10 times as many shares out there as there were 8 or 9 years ago. This is because AMC was between a rock and a hard place, frankly, during pandemic times, and they issued shares, and there was that big squeeze thing that happened back in 2021. Now, a little bit of nostalgia. I actually did hop on that hype train for the lulz. 11x'd my money, made like $3,000 or something. I put like 300 something in there and got like over 3,000 out of it. Not really the kind of thing I'm known for, but I was in a different headspace a few years ago, so what are you gonna do? Definitely not the kind of thing I would try to do today. It was a situation where I just got lucky, right place, right time. But in the long run, I want to know how it is anybody that's buying AMC based on a good box office weekend and this decision blocking the conversion of the shares. What is it that you think your pathway is to a return? I mean, I need people to ask themselves that, right? Because earnings has been massively negative, okay, and doesn't really show signs of going positive anytime soon. See, the purpose of a business is actually to turn a profit, generate positive cash flow, return value to your shareholders. That's why you're in business, okay? Revenue has not returned to 2019 levels, all right? And gross margins, and this is something you see in basically every in-person, experience-based entertainment type thing. Any business that has a strong component of in-person experiences has this issue, all right? Disney with their theme parks and cruise lines, Carnival Cruise Lines, which is just a cruise line, AMC, which is just, in person butts in seats movie, and it's going to take a lot of butts in seats to turn this around, but not just for one weekend. That's where I'm getting at with this. Every other company like that has kind of had this similar compression of their gross margins, okay? Because the butts couldn't show up to the seats for a period of time. Now, they've started to show up again, but for some reason, the gross margins are not coming back in a lot of cases. Now, the difference between an AMC and like a Disney is that Disney's got a massive war chest, okay? And they've got a lot of non-in-person experience type components to the business, all right? They've built out Disney Plus, which hypothetically could become profitable someday, and doesn't rely on people showing up. Their theme park attendance is actually back, and it's they're crushing it as far as attendance and ticket prices being up and everything else. AMC though, that's not where they're at. All right, this last weekend here is one of the first times they've had a high level of attendance like this since before the pandemic. Okay, but even still, I don't think that one weekend is going to turn around these sickly revenue and gross margin numbers. And, even when you look at what analysts think going into the future, right? You sit here and you see that, like, the average projections for analysts don't even have them going positive on earnings, even as far out as 2027. So if you're sitting here buying this stock today, knowing that the only plan they have to fund future operations is to dilute you against any future positive earnings that they might have eventually, maybe. And the fact that analysts can't even project positive earnings in 2027, all right, that should tell you a whole heck of a lot about what you should be doing with this company. I don't think that buying something, just crossing your fingers, hoping and praying for a squeeze is really the way to go with your investing. Now, if you're a person that's just, hanging on to a few shares for the nostalgia or the lulls just to see what happens, like, okay, if you're treating it basically like money that you could basically throw away like you would if you were, going to the casino for a night playing slots or like a lottery ticket or something, okay, I won't hate on you for it. But if you're considering this as like a serious investment, like a big part of your portfolio, that is a little bit crazy in my mind. I'm definitely not interested in getting back involved in the AMC rigmarole. And honestly, it's no question in my mind that the APES are indeed in danger, okay? This honestly reminds me a whole heck of a lot of Bed Bath & Beyond when I was looking at their financials close to the end. They maybe were a little worse, but, this doesn't look optimistic from where I sit. Let me know what you think, though, in the comments below. Hop onto the Discord. Link will be in the description. Hit the join button to become a channel member. The lowest level is only 99 cents a month. That's less than a nickel a day to be a part of my inner circle. There is no secret mastermind Discord, as much as some people might say, but you will have a higher level of access, a few little perks around the edges, and a little bit more say in the direction of the channel. If that floats your boat, hit that button. Anyways, take it easy, everyone, and as usual, have another manic Monday.